Hello, today is November 17th, 2022, and it's time for some new stock pick videos. Beautiful day here in Vancouver today. The sun is shining. Normally it rains every day this time of the year, so we're very happy. We always are, but good day. As always, I'm first going to review the performance of the picks from this time last year, and we got lucky again. We beat the market. The three picks from last year were TD Bank, which was down, including dividends, 7.5%. Comfort Systems USA, which was up 28.2%. And Barrick Gold, which was down 11.3% for an average of up 3.2%, which compares with the MSCI World in US dollars using the URTH ETF, which was down 12.4%. Going forward, things have changed a little bit in the last month or so. The high inflation numbers that we've been having all year started to ease off just a little bit, but that was enough to give the markets and investors some optimism. So they pushed both stocks and bonds up in the last 30 days or so. So longer term rates came down and stocks went up. While we're still facing most likely a recession for next year, and we are probably in a recession this year too. I need to define what the recession actually means, because it's been used widely in the media with no particular definition. I'll give you a definition of that I use as a kind of a global investor. World GDP in inflation-adjusted dollars and US dollars has to come down. So it's negative GDP growth in constant after inflation adjusted dollars. So the US dollar having gone up so much this year, it is very, very likely that 2022 is going to be shown to have been a recession year. So all the other countries' GDPs other than the US, when converted into US dollars after inflation, very likely they're going to be negative this year. And next year, likely as well. So with that scenario, with the markets having come up a little bit and still having tougher economic times ahead, this is not the time, I think, to go very heavy into growth stocks. And this is not a terrible time to invest either. Recessions come and go, but if we stick with what works over the long term, good companies, especially when we buy them at good prices, then we're going to do just fine. We're going to do pretty well. So three such companies, I believe, that fit the bill are the highest quality first, 3M. Everybody knows 3M. They make all these nice little gadgets, the post-it notes and things that we use every day. It's not recession-proof, but it's a good quality business. And because of the sell-off in the markets, we can now buy it for a very good price at a forward PE of less than 13 times. Normally, the stock would trade at a much higher valuation. So, good time to pick up a good company at a good price. And if the earnings decline a little bit and the stock goes down a little bit in the short term, so be it, because we end up holding a good company for what we want for the long haul that can compound good returns for a long time. Second pick would be a Canadian company that also fits the bill. Manulife, largest insurance company in Canada. The insurance companies generate their return on equity in the low double-digit area, so they're not terribly exciting. They're not going to give you the huge long-term returns, but if we can buy them at a good price, I think that's still pretty good. So that's the case with Manulife. We can buy it at a discount to book value, so 0.9 times book value is quite good. So the return on our investment, including dividends going forward, over a long period of time, should be in the double digits, which is good for a fairly stable business like Manulife's business. And my third pick would be Michelin, the tire manufacturer, based out of France, but essentially selling all over the world. It's another example of a good business at a good price. Again, like tires, the business, it's economically sensitive, so I mean, it's not recession-proof. But again, it's another case where we're buying a good business at a good price, and all we have to do is when that happens, just hold it for a long time, and hopefully the business doesn't deteriorate. They have a competitive advantage, I believe, because their tires are some of the best in the business, and that's the good position to be in. So as always, if you'd like a second opinion as to whether these stocks fit into your hopefully already well-diversified portfolio, or if you have any questions on any other stocks, please give us a call. Thank you, and have a great day.